Let's bring in Kirk Ludtke, the Senior Vice President of Autos, Industrials, and Specialty Finance at CRT Capital in Stamford, Connecticut. He covers GM, and he joins us now by phone. Mr. Ludtke, welcome to Bloomberg's Bottom Line. Appreciate your time today.
Thank you for having us, Mark.
As our senior markets correspondent Julie Hyman succinctly pointed out, GM's earnings, they beat by 5%, but Ford beat by 25%. So not exactly the time to be popping the champagne corks at GM?
Well, Mark, Ford went, they released their first quarter results a week or so before GM. So I think that's, the expectations subsequent to that for GM moved up. And so I think it's tough to compare, consensus and where the numbers actually came in because of the timing differences.
Did GM's first quarter sales rely too much on incentives?
Well, that's if you were just to look at the bridge between the first quarter of 2010, the first quarter of 2011, volume and mix was more of a positive than price was a negative. So you could make the argument that GM came out ahead. They did cut price. Their competitors, for the most part, didn't follow, and so they gained some share. But stepping back from it, I think it tended to be contrary to what they were saying on the roadshow just a few months ago, and I think it confused the marketplace. So I think they're backing away from that strategy, and you could see that in March. Their incentives came down quite a bit and came down again in April, and actually their share increased in April. So it seems as though they're backing away, and it's working for them.
How does GM control costs?
Well, you're talking about commodity costs or structural costs?
Yes, both, but commodities firstly.
Well, they do have some contractual agreements with their suppliers that help mitigate that, and that's the first line of defense. And then also I think they can also pass some of that on to consumers. I mean, GM, as I said, took off a lot of their incentives toward the end of the first quarter. They actually increased prices just a few days ago, and that's the second line of defense, is to pass it on to consumers.
Give me a sense then, because with this GM report today, highest quarterly profit in more than a decade. Tell me about this 10-year journey for GM.
Well, it's a long story. Obviously it was a sad one for a lot of people. I think there's plenty of blame to go around. The good news is that they've emerged from bankruptcy, I think, much stronger than they've been in any time in recent memory, and as a result, because GM's such a big part of the U.S. market, the entire market's healthier, and so that's benefiting Ford and Chrysler, because GM just isn't. All three of the companies are in a position where they don't have to make product that consumers don't want.
Internationally, the international operations, that includes Asia and Russia, we saw earnings falling about 47%. What does that say about what's going on overseas?
Well, I think you may be referring to the segment of GM that participates in the Chinese market, and the reason those are down is I think they just had a really tough comp. I think the first quarter of 2010 was particularly strong, and at the time, GM management highlighted that those types of margins weren't sustainable. I think the story in China is actually a very good one. The company's sold a record number of vehicles in the first quarter in China. Its share was up pretty dramatically year over year. So I would say that the Chinese story is intact.
Kirk Ludtke, Senior Vice President of Autos, Industrials, and Specialty Finance at CRT Capital, joining us on the phone from Stamford, Connecticut. Thanks so much for your time. We appreciate it.
Thanks, Mark.